Hello everyone. Welcome back to our channel. If you're new here, my name is Your Name, and today we're diving into a topic that's becoming increasingly popular among investors: target date funds. Whether you're planning for your retirement or just starting to think about your financial future, understanding target date funds can really help you make informed decisions. So, let's get started. But what exactly is a target date fund? And why should you consider it as part of your investment strategy? Well, let's break it down. First off, a target date fund is a type of mutual fund that automatically adjusts its asset allocation based on a specific target date, typically set in the future, often aligned with your retirement date. For instance, if you plan to retire in 2040, you might invest in a target date fund labeled 2040 Fund. The key idea is that the fund is designed to become more conservative as you approach that target date. Now, let's talk about how this works. In the early years, when you're far from retirement, the fund usually holds a higher percentage of stocks. This is because stocks generally offer higher potential returns, albeit with higher risk. As you close in on your target date, the fund gradually shifts its allocation towards more bonds and cash equivalents, which tend to be safer investments. This strategy is known as a glide path. For example, a 2040 fund might start with 90% in equities and 10% in fixed income. As the years progress, the allocation could shift to 70% equities and 30% fixed income by 2030, and then slowly to 50% equities and 50% fixed income as you approach 2040. This gradual shift helps to manage risk as you get closer to needing your money. One of the biggest advantages of target date funds is their simplicity. You don't need to be a financial expert to invest in one. You choose a fund that matches your target date, and from there, the fund managers take care of the rest. This is particularly appealing for younger investors who may not have the time or expertise to manage their own portfolios actively. In fact, according to the Investment Company Institute, target date funds have seen tremendous growth over the past decade. As of 2021, they held over $1 trillion in assets, up from around $100 billion in 2005. This surge can be attributed to their popularity in retirement plans, especially 401s, where many employers automatically enroll their employees into these funds. However, it's important to also consider some of the downsides. For instance, not all target date funds are created equal. They can vary widely in terms of fees, investment strategies, and how aggressively they shift their allocations. Some funds may have high expense ratios which can eat into your returns over time. Therefore, it's crucial to do your homework and read the fund's prospectus before investing. Another point to consider is that target date funds may not perfectly align with your personal risk tolerance or investment goals. Just because a fund is labeled 2040 doesn't mean it's the best fit for everyone planning to retire in that year. You might prefer a more aggressive or conservative strategy based on your individual circumstances. So, it's wise to assess your overall financial situation and possibly consult with a financial advisor. So, to summarize, a target date fund is a convenient investment option that can help you manage your retirement savings with a built-in strategy for risk management. They are designed for simplicity and ease of use, making them an attractive choice for many investors. But remember, they aren't one size fits all, so make sure to evaluate your options carefully. If you found this video helpful, give it a thumbs up and consider subscribing for more financial tips and insights. And I'd love to hear your thoughts on target date funds. Have you invested in one? What's your experience been like? Let's continue the conversation in the comments below. Thanks for watching, and see you next time.